Breakout momentum trading has been a pretty interesting change for me. I was someone who 100% adopted the buy the dip mentality, always was a dip buyer to get a better deal, and always was looking for more of the contrarian side of a move, right? We've been going up for so long. Okay, that's going to end soon. Everyone on the long side is going to get trapped, and I want to play the backside of that. But that also didn't put me on the plus side of profitability as much as I thought it would, or at least I wanted to. And of course, through the course of many, many years and weeks and months of scratching my head trying to think, there's got to be a better way. There's got to be a better way or a better system that I could create that allows me to put myself on the plus side of a coin flip, and at the same time, more of a systematic approach to classify when something is worth the dip buy or the entry or the exit. And playing dip buys or playing more of a contrarian style to trading, more of a return to the mean, etc. There's a lot of ways you can phrase it, a lot of different styles out there. Just for me, never quite clicked. I really think that if I were to go back, I could certainly craft a systematic approach to it. But breakout trading has been and breakout trading, when I say that, I mean by the long and the short side. I don't just mean up, okay? I really think that you should be able to play both ways, and it's really the same exact thing. In my view, the way I do it both ways, based on my strategy and systematic approach that I have. So in this video, I wanted to cover 5 things that I have specifically learned from breakout trading over the past 6+ months. It's really been about 6 months now as I'm filming the video. We're going on beyond that I have strictly been trading breakouts, and that's the only trade that I take. Now, from an investing side, that's a different story. I split the two things up and put them in different categories. I do not trade the way I would invest. If I'm investing, I'm buying the dip, as we say, on ETFs and positions that I want to hold long term, not speculating on stocks because this is the next best thing that I think. I don't know. I don't really care. Give me a collection of stocks. Let me bet on that collection versus trying to bet on one specific stock and having to deal with earnings volatility, having to deal with news volatility for that specific stock. I just don't want to deal with it. So let's dive in. Now, I really think I like it here. I like it here on the momentum breakout side, and I don't think I'm going to change and jump ship or anything anytime soon. At a minimum, I want to give it a year plus of really trading the same system and trading the same strategy and saying to myself at the end of the year, are there critiques? What are the positives? What are the negatives of this strategy? And that's what I want to dive into today so far. Number 1, the big picture matters. Absolutely. You hear everyone always say it. When in doubt, zoom out. So go to the daily charts. Go to the weekly charts. Hey, go to the monthly charts. Get a good picture of the trend. Get a good picture of what's been going on. And if you're playing breakouts, you're going to have a higher probability of that breakout going your way if the trend over the past, let's say you're taking a trade on a day trade. If the trend the past couple of days and weeks has been up, right? You want to play with momentum. If the trend's been down, then playing a breakout to the upside, gotta scratch your head. Like maybe we've seen a small reversal, but if it's still inside of a bigger downtrend, then why are you playing a breakout to the upside inside of a bigger picture downtrend, right? You want to at least see it break out, of some lower highs, like do something, give you some higher lows, give you something to say, hey, we are breaking trend, breaking pattern. And that's where the big picture matters. And I've seen it time and time again in my own trading. I always say, oh, well, maybe I want to take this. Every time I lose or I recognize the mistake, one of the first things I'll think back to, or I'll go back to, or I'll realize is that the big picture was not aligned with the direction of the breakout that I was trading. Okay? It's a pretty big piece. Number 2, you're 100% going to get faked out. You're going to play breakouts that are not going to work. You're going to get faked out. Okay? You're going to get in, and it's going to be a breakout to the upside off of a key level of resistance or whatever, and it's all of a sudden going to go whoop, woo, and get destroyed. And that's a situation that's going to happen. I've been in that many times. It's going to happen, but is it the end of the world? Not really. And I'll tell you about why in just a second. I'll kind of hopefully make more sense. It really is very simple, in my opinion. It's very simple. But number 3, the time on the screen has decreased. So I still will find myself on days where things are choppy and I'm kind of finding myself almost fighting the market, which it happens. It's now a game of like minimizing that and recognizing when you're doing that to then either size down or to pull yourself out of the game so you can't injure yourself, you can't hurt yourself, right? You can't cause bigger problems. That's what I believe, to be honest, trading really comes down to. The strategy is the simple part. There's a lot of strategies that can work. Any strategy can work. You can tell me what your strategy is. I'm not going to look at you and go, oh, you're a dumbass, right? I'm not. You could have a massively detailed strategy, or it could be super simple. As long as you've got something that you say, I only trade this, or I trade when this happens, like these are my 2 strategies or my 3 strategies, and I do this when this happens, great. The biggest problem, the biggest limiting factor, I think, is yourself. It's ourselves. Like, that's the biggest problem that we then have of when we deviate from our strategy, when we start seeing things that aren't there, fighting the market. Those are things that we need to do a better job as a trader, whatever, to mitigate, right? But when you're playing breakouts, I have found that the trade either works or it doesn't work pretty quick. I'm not sitting here. I play them on the 5-minute chart mostly. Usually it's 5-minute chart. Usually I'll look for, 1 hour chart or daily chart for confirmation, and on the 5-minute entry point, like, it's pretty quick that we know we're right or wrong. And so it allows me to get in and get out, whether it's a win or loss, pretty quick. And then I don't have to sit in the trade, think about averaging down, think about selling early, there's no additional time that I'm sitting in here that I'm wasting or overthinking a trade. I think that's pretty helpful. Not to mention that, realistically, you can come in and have a 2-hour window during the day and say, hey, if there's a trade during this 2-hour window from, let's say, open to 2 hours into the market, I'll take one. And if not, or even 2.5 hours, I'll take one, from 9:30 a.m. Eastern to lunchtime Eastern. If there's something there, great. If not, okay, I walk away. Today is not a trading day. It is what it is. And maybe I come back for power hour. I don't know. But you can kind of craft a strategy based off of data to, optimize your time. And I think it's very nice. When you're playing the opposite side, when you're playing the reversal trade, the return to mean, whatever, you can find yourself fighting the trend, and then the trend starts to reverse, even if you're right. And it just might take a while for that reversal to kind of play out, and then for the momentum to kind of turn around. And depends upon your take profits and how you play the strategy. I found that I put myself in too many scenarios where I was waiting all day, and it didn't stop me out, but didn't hit my take profit. And I'm just waiting because I'm playing the reversal and trend, and maybe we don't really have a clean trend reversal that day, and it's like kind of a slower consolidation into the end of the day, and you waste the whole day, and it's like, oh my gosh. You could just kind of put a stop loss on, take a profit on, and then walk away. You could, but depends upon your scaling strategy, your broker, and how that works. I just found that, to me, wasn't a huge fan. So that's a positive to breakouts, right? Less time on the screen, because right at the end of the day, right, you don't want to be sitting here all day. You want to maximize your hours. Number 4, when it works, right, your risk reward is nuts. So when the breakout works, up or down, you tend to see a big momentum push up or down, and that could really throw the risk reward heavily into your favor. So wherever your stop loss was or your invalidation point becomes like this compared to our reward, that's like huge, right? This thing could be big if the thing just trends, breaks out, and just goes for it, right? Now, that's not going to happen all the time. You just need to make sure you manage your risk, because when it does happen, it's going to be awesome. And if you have a scaling strategy, you can take good advantage of that. Are you going to have captured the entire move? No, you're not going to. But if you can consistently put yourself in a scenario where when those moves happen, you can capture a good chunk of it, and then your stop losses are consistent and you always lose the same amount on losing trades or something along those lines, and those losses have to be less than those bigger wins, you're going to put yourself in a good spot to where all you got to do is be right half the time, be right 50% of the time. So I don't think that that's that incredible or that impossible to do. I have seen my own win rate for months be up in the upper 60s off of 50 plus trades, and I've seen my win rate be in the 30s and be almost profitable with a 30-something% win rate. And that's because managing risk, right? I've seen the flip side too, where my win rate was 50+% and I was massively down because I didn't manage risk. So as long as you manage your risk well, the risk reward is heavily in your favor when things do work. Just keep it in the back of your head. And number 5, breakout trading is no riskier, it's no scarier than any other trading style. It's just a trading strategy, it's just a trading style. Because someone says, oh, you're never going to be able to make money trading breakouts, if someone says that, I immediately lose any trust in the person, because I really don't trust what they have to say. Because they don't understand that you can make any trading strategy work. It then becomes the job of the trader to optimize it, manage risk, and craft a systematic approach to put you at a 50-50 or better win rate. You don't even have to do that. You can be at a 40% or better win rate with really good risk management and really good risk-reward ratios. And you could make money. It doesn't matter. As long as your stop loss is set and you know how much you're losing going in. I always will enter a trade. The first thing I do is, before I enter, okay, if this is my stop loss, how much is that going to be of a loss? Is this take profit? Does it make sense to enter here on this breakout? Is that a reasonable target to expect if we get this breakout or breakdown, whatever? That's how I frame the trade. So it doesn't have to be scary as long as we have stop losses in place. If you don't, if you start kind of saying, I think it's going to go, and it kind of breaks out, then it pulls back and it falls back down lower than you thought, and then you start adding the dip, you are a fucking mess. It's just, you're a mess. That's not a trading strategy. That's you thinking, guessing. And many times you can be right during doing that, but it only takes, 1 or 2 times of being wrong, and being wrong in a big way, to blow an account. And it's just like, what's the point of that? Yeah, many times you look back and say, hey, if I just didn't do that, you'll go ahead and you'll correct things next week or whatever, next couple of trades, and say, boom, 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 I'm making it back. But if I hadn't had that huge loss, I'd be so much bigger in the green. It comes down to that risk management, and it's just like anything else. So there you guys have it. Those are the 5 things that I have learned trading breakouts over the past 6+ months. And I'm curious to see how this grows and what else I take away going forward over the next 6+ months, through different times of the year, through, then eventually repeating times of the year, trading the same strategy during, the same months, or now new months into the new year. It should be a lot of fun. Any links, resources, I'll leave up down below. Trading journals, one of the best ways I track my trades with TradeZilla. I use them all the time. I use them every single day in all my trade recap videos as well here on the channel. Make sure you are subscribed, hit that thumbs up, and I'll see you in the next one. Peace.